Malhotra.
Thank you, Mr. Deputy Speaker. I want to start by paying tribute to Rachel Neal and the Mortgage Prisoners Group for their incredible resilience and the way they've worked for the last 2 years with the APPG on mortgage prisoners, which I co-chair, to help get a pragmatic solution to the problems we know that they face. And also to my constituent, Mohammed Masood, who first brought this issue to my attention after his family's own experience, a situation after so many years which is still ongoing. I'm grateful for the opportunity to speak in support of Lord's Amendment number 8, which would provide immediate relief to up to 250,000 mortgage prisoners. The FCA's estimate by capping standard variable rates and ensuring that they could access fixed rate deals. The arguments for this were made very powerfully and movingly in the other place, and indeed by my honourable friend from the front bench tonight. The Minister said he wants to be guided by the facts, and I thank him for his commitment for addressing this issue. But perhaps I can share some other data and interpretation of the same facts, and why I and others believe that the solution proposed in Amendment 8 would indeed be both proportionate and practical. The 250,000 mortgage prisoners took out their mortgages prior to the financial crisis with fully regulated high street banks like Northern Rock. They were then kept trapped on high standard variable rates before being sold to mortgage loan sharks like Cerberus, Tulip and Heliodor. The amendment applies a cap on the standard variable rate for mortgage prisoners with inactive lenders and unregulated entities and ensures that they can access fixed rate deals. It is a targeted intervention and would have no impact on the wider market of active lenders such as the main high street banks, which compete to offer their existing customers new deals. The margins on these Northern Rock mortgages increased significantly after the financial crisis. As interest rates available to people at active lenders fell, the government kept mortgage prisoners on high SVRs and then sold them off to inactive lenders and vulture funds, who also kept them on high SVRs. Prior to the financial crisis, the gap between the Northern Rock SVR and the base rate was 2.09%. Since 2009, it has been 4.29% above the base rate. When the government sold on the loans, it gave some of the purchasers, such as Tulip mortgages, complete discretion on interest rate policy after 12 months. Protections for later packages of mortgages sold only required the SVR to be kept at the level of the third highest of a basket of 15 SVRs, which was higher than the current rate charged to mortgage prisoners. If mortgage prisoners were entitled to new deals on the same basis as other customers, then the average rate they would be paying would be 1.8%, below the level of the proposed SVR cap of 2.1%. The Minister suggested that the SVRs paid by mortgage prisoners are just 0.4% higher than SVRs at other lenders. As I said at report stage, our case studies, which includes nurses, teachers, members of the armed forces and small business people, tell another story. It is inappropriate to compare the rates that borrowers with inactive lenders are currently paying with those by SVR customers at other active lenders. If mortgage prisoners were with an active lender and up to date with payments, they would have access to a product transfer giving them a lower fixed rate. The Treasury has said that this amendment cannot be supported because it would not be fair to borrowers in the active market. But more than 75% of borrowers in the active market move off the SVR within 6 months as they are able to access a new deal. Mortgage prisoners have been stuck on high SVRs for over 10 years. Their mortgages were sold by the government without their consent and without the proper protections. People trapped on these high interest rates don't have much chance to reduce the amount they owe. This means that when their mortgage finishes, when they are in their 60s or 70s, these mortgage loan sharks often put pressure on them to sell and threaten to repossess their home. The FCA and government claim to have helped mortgage prisoners by changing the rules on affordability tests, but there has been very slow take-up of these new flexibilities. The FCA's cost-benefit analysis published when the rules were proposed estimated that somewhere between 2,000 and 14,000 mortgage prisoners would actually switch using the new rules. The APPG has received reports from campaign groups that only 40 mortgage prisoners have been able to switch so far. Mr. Deputy Speaker, mortgage prisoners have been neglected for over 10 years. Families have been destroyed and homes have been lost. While the Minister commissions yet another review, every month mortgage prisoners struggle to make their monthly payment due to high interest rates. The delays will mean more homes will be lost. As consumer champion Martin Lewis has said, an SVR cap on closed book mortgages would provide immediate emergency relief to those at most risk of financial ruin. No one should underestimate the threat to well-being and even lives if this doesn't happen and happens soon. We welcome support for this amendment from Martin Lewis and from Surviving Economic Abuse. The government has the option of coming up with an alternative proposal to provide relief that mortgage prisoners so desperately need. So far, it has failed to do so. That is why I hope that all colleagues will support Lord's Amendment 8 tonight. Thank you.